Today's lesson is all about gaps. Now, before we really dive into gaps and give you the full breakdown, let us just remind you how easy it is to pull this indicator up, and then the platform will automatically and instantly detect every single gap on your chart with tons of inputs and style settings that you can customize to yourself. So one more time, watch how easy this is. You head up to the Indicators, Metrics, and Strategies menu. You can go ahead and search gaps. Remember that there are community scripts which are coded by traders and investors around the world. They will add their own flair, their own take, their own code to the concept of gaps, so you can try these yourself or go ahead and send these traders and investors a message to learn more about their coding skills. But for the sake of this video, there's gaps. It's a built-in indicator on TradingView. We have it favorited here. And in addition, there's a little tooltip icon that we can click, show description, read all about gaps. But before we dive into that, just watch. We click gaps, and now we're going to head and zoom out, and instantly we can see all of the gaps on this chart of Apple. Keep in mind that this video is going to focus on gaps in equity trading and equity investing, but a lot of the concepts will still apply to futures, forex, crypto, and more, because what a gap is it's detecting a gap in price from one candle to the next. It also could be hollow candles, any type of chart type that leaves a space in between 2 points in time because either the market closed and then opened the next day, or because price jumped quickly from one price to the other, and rather than filling in the chart as a line chart would do, because it's just continuously plotting the price, instead, for the example of bars or candles, there's going to be a gap shown here to really illustrate to the trader or investor that there were no trades in these two areas in the time session that you're looking at. So what we mean by that is this is a daily chart of Apple. So every candle here represents a full trading session of Apple according to normal hours. That's 9:30 a.m. Eastern to 4 p.m. Eastern. That's when Wall Street is open, when the New York Stock Exchange is open. And in this example, Apple closed here, so that's where the price closed. But the next day, when the opening bell rang, when markets officially opened for trading, it opened here. And that explains this huge price gap here. There were no trades in that area during normal market hours, thus there's a gap on the chart. And with the gaps indicator, you can instantly detect that. It is automatic, it is fast, it happens instantly. We'll just show you again. Look at that. So you can detect any gap on your chart, especially useful for equity trading. Many of you equity traders know that earnings especially can cause gaps because in the world of equity markets, earnings happen either after the market closes or before the market opens. They rarely, if not ever, happen during market hours. And yes, you can trade during these rare hours, but it's often low liquidity. It's usually for professional investors, market makers, hedge funds, quants, but some retail traders and investors also do partake. But nonetheless, you will most often than not see gaps because of earnings reports or big news releases. But this is how you can spot gaps on the chart. Now, before we dive into the concept of after hours trading and pre-market trading, let us first really dive into gaps and maybe remind you of a few ways to use this for trading and investing. So we're going to go ahead and go to the settings of gaps. So when you have the gaps indicator selected here, one of the really cool features of this tool is the close gaps partially tool. And this is related to how you can trade gaps or invest in gaps or use them for better research. Remember, this is never advice or any recommendation. It's educational. It's purely to show you some different ways to use this tool, and closing of gaps is one of those ways. So there's a saying that gaps often act as magnets, or gaps have memory. And so when we check this box, you'll see that some extra lines are drawn. And these extra lines are drawn to demonstrate that the gap was filled. This is a key term for trading and investing. It is used often in the world of trading. Gap fills. And what that means, we're going to hide this, is that if you look here at this gap, so you can see price is down here, and then the next day it opened up here, and now there's a gap here. This price, this area is a gap. There's been no trading history in it. But because it's empty, if something significant happened in this area that caused price to jump, thus it may be a level of support and or resistance to pay attention to. Because if price can jump from down here to up here, clearly there's something in this zone that means the value is either below that or above that, and traders were very quickly willing to bid the asset up above all this empty space. And that means this empty space may have memory, or perhaps it will get filled. And a gap gets filled when, at some point in the future, price comes back down to that area, which is so interesting because we can actually see this gap here. We're just going to now draw this across our chart, was indeed filled. You can see that the gap happened here in May of 2023, and it was filled here in September of 2023. So after several months of price going above that gap, it came back down and filled it, and thus it's filled. And when we add the indicators or the gaps tool back here, and we open up its settings and we have close gaps partially selected, it will automatically detect these filled gaps. How cool is that? So you can see all of the filled gaps on your chart just by making sure that this box is checked. Check that out. You can see these filled gaps here now. One more quick point about gaps as well that is interesting about support and resistance is you may have even noticed, for example, that on this specific chart, there was a little bit of support here, right at this gap, this lower, or this high area of the gap fill did serve as some support. And once again, look here as well. So gaps have a lot of price information in them if you use them correctly, if you use them wisely, if you do your research, and if you take advantage of a built-in indicator like this, which is designed exactly to show you all of the gaps on the chart. A few other things to pay close attention to are the max number of gaps. So its default is 15, but if you wanted to look back further, well, find us 30 gaps. And now it will go way back in time and find us 30 different gaps to look at on the chart. As a trader and investor, this is fantastic information because you can even use this as levels of support and resistance. Any gap that hasn't been filled might be worth adding to your notes or just paying close attention for future trades. Obviously, if Apple came back down to 100 from 173, that would be quite the crash or quite the dip. But nonetheless, if something like that were to happen, you could use this tool to at least give yourself a guide or a map of sorts for prices to pay attention to. You have all these empty gaps down here that have still not been filled. And this is actually 2020. That's when COVID really hit. So you still have all these gaps here that could potentially come into play if an event like that were to ever occur. Let's go back to the settings menu some more. And the minimal deviation, you can click this little eye tooltip here. This tool is effective for determining what types of gaps that you want to find and sort of the size of those gaps. So by default, it's set to 30%, but if we set it to 50, you can see there's been some changes here. Some gaps have disappeared and new ones have been drawn. If we set it to 90%, which is much different, something similar happened. If we go up to 5%, it's now much less because it's looking for much more specific and smaller gaps. And if you open up the settings menu and read this, well, let's put this back to 30. This is a way for you to look and detect for gaps as a percentage of the average high-low range for the last 14 bars. So these gaps are going to be especially relevant to the most recent trading depending on the percentage that you select. There's also a limit max gap trail length. So let us demonstrate what that means. Well, let's say you've got gaps on your chart and you have all of these here from 2020, but you don't want this to go all the way across your chart. If you go to the settings menu and change this to example to 50 bars, so only travel for 50 bars, what you'll notice is that, and you have to make sure the box is checked as well, you'll notice that all of the gaps shrink because now they're limited to 50 bars, or let's do 150. And now you'll notice these ones grow a little bit longer, or let's do 300 in this example. And you'll notice they've all grown a bit longer, but let's turn this off because we want to see the gaps drawn all the way across our chart like this. If we double click, we can also change the color. So up gaps are green, down gaps are red. If we go to style, we can choose to uncheck boxes or tables. Visibility, of course, is an important tool because it will tell you what time frame do you want to see the gaps on. So if you only want to see gaps on a daily chart and you don't want to see it on hours, minutes, or seconds, well, every single time you go to an hourly chart, the gaps are no longer there. And this is actually a perfect time now for us to demonstrate to you the different time frames about gaps and how to really dive in. So we mentioned earlier, one of the key functions of gaps is that, especially in equity markets, they often occur in after-hours trading and pre-market trading. A lot of people don't know this, but normal market hours, when the most trading occurs, is from 9:30 a.m. Eastern to 4 p.m. Eastern. However, what you may find surprising is that some trading does occur after 4 p.m. Eastern and ends at 8 p.m. Eastern. In addition, some trading does occur at 6 a.m. ET and ends at 9:30 a.m. ET. So you have your normal market hours when all the volume happens. Retail traders, retail investors, market makers, hedge funds, institutions, money managers, indexes, you name it, are all trading. But you also have these rare, often overlooked hours that occur when the normal hours are closed. Yes, to many that is confusing. Why not just keep markets open the entire time? But they are designed to really bring liquidity into a main window of trading hours. But knowing that there are these other hours is an edge to be aware of, especially for earnings reports, because traders and investors are always trading these earnings reports, and earnings reports ultimately move markets. So for example, if you have the gaps indicator selected and you want to figure out exactly what happened, let's just actually make sure our closed gaps are off, and you want to make sure that you know exactly what happened at this point in time, well, you can lower your time frame, say to 1 hour. Let's zoom out, and here's this point in time. And then let's also change our regular trading hours to extended trading hours. Remember, these are the hours we were just telling you about. And now we have extended TradingView trading hours on our chart. And if we zoom in, let's keep zooming in. Now we can see here, based on these shaded colors, the extended hours. And if we click settings and make sure we have symbols selected, go down to our session, we have extended hours. So we're looking at the regular trading hours. That's this normal gray here. There's no shaded color. But you can see we have pre, and that's going to be orange. Think of orange as a rising sun. It's early morning. Here's your orange. And blue, which is post-market hours. Think of the sun going down, the moon, the sky is getting darker. That's the blue here. So now you can very easily see your normal hours, no shade, your after hours, blue, and your morning, this orange. And you, of course, can customize these colors as needed, but now you can figure out what happened at that exact gap. So you can see right here, earnings. There was an earnings report. And you can click this E to see that Apple beat. And now the gap makes sense. Apple closed here. It reported earnings. It beat on earnings. This after hours trading volume occurred and it pushed price up. And by the time the market opened up the next day, price was that much higher. And thus, we have a gap directly on our chart, which is the one we're examining right here. And to bring us all the way back to the start of the video, this is the same gap that quite literally just got filled right here. So how cool is that? You have full control over all of this. It all starts with understanding the gaps built-in indicator and the features and tools that come with it. And it also starts with understanding your time intervals, which, remember, if you're still watching this and you're a rookie trader or investor, we have 1 day selected, and that means that every candle on this chart is 1 day, And if we go to 1 hour, every candle on this chart is 1 hour. And now it's easier for us to see these after-hour sessions and pre-market sessions, because when we're on a 1 hour chart, it will include those unique time zones. One more quick tip, an important point for people still watching, is look at the difference in volume. So when you hear people talk about after-hours trading or pre-market trading, there are huge differences in volume, and that's why the regular trading hours are generally the most important, because look at the size of these volume bars. They are just enormous compared to these teeny tiny little volume bars, so the liquidity is not as high. It won't be as easy to get great execution. It may not even be easy to get out. You might get trapped in a trade, or perhaps there's just no one there trading at all. And that is why it's important to understand how extended trading hours are different from regular trading hours, but also that should give you some more context and information into gaps, because sometimes a gap might occur, and if you really dive in and really zoom into that gap, you may find that there wasn't that much trading volume to begin with, so perhaps the gap is not as valid or as impactful as you may think it is. So, ladies and gentlemen, thank you so much for watching today's lesson on gaps. We hope you get in there and try this tool. Once again, it all starts with the Indicators, Metrics, and Strategies menu. Type in gaps, select the indicator or read about it, and you're off to the races. Thanks so much for watching.